What's going on, you guys? It's Royce Jacob. Welcome back to the channel, and in this video I want to talk to you guys about what I would consider to be my ideal options contract. So we're talking both call options and put options for stocks that I believe will see a significant move either up or down in the near-term future. Alright, so we'll kick this video off with a little write-up that I made for you guys, kind of covering some of my key points and key thoughts in regards to these contracts that we're going to be talking about. We then have the call option right here, put option, talk to you guys about those. And then, as I'm sure you've already noticed, I have Robinhood mirrored for you guys on my screen, and I'll actually show you guys in real time how I go about finding these contracts. Okay, so before we get into this write-up, I will ask you guys to please give the video a like if you gain any value from it, and subscribe to the channel if you are new around here, all right? You can also check out my complete portfolio and daily newsletter down below. First link in the description. I'll talk a little bit more about that later, but let's get into this write-up, all right? So, my ideal options contract for the short term. I personally view options contracts as a means of leveraged investing. Typically, the contracts I'm trading will provide significantly greater returns than holding a share of the stock itself. The details below define contracts that I've found suit my risk-reward profile the best. This game is very subjective, so the ideal contract is very dependent on your personal appetite for risk. These metrics are also focused around stocks that I believe will see a sudden move up or down in the short to medium term future, which I would define as 1 to 2 weeks. I know I said short term. I would personally consider 1 to 2 weeks short term. Some high frequency traders might consider that a little more medium term, but we'll call it short term. All right. So call option, strike price, it's pretty simple here. The strike price I look for is plus 25 to 30% from its current share price, and the expiration date is 45 to 60 days out from the current date. Example, one share of a stock that I think will go up is worth $100 on January 1st. I will look for a contract with a $125 to $130 strike price that expires in late February. All right, put option, strike price, minus 25 to 30% from current share price. So the exact same as the call option, just the other way if you think the stock's gonna go down. Expiration date 45 to 60 days out from the current date. So exactly the same, just the other direction, date's exactly the same. Example, one share of a stock that I think will go down is worth $100 on January 1st. I would look for a contract with a $70 to $75 price strike price that expires in late February. Okay, so very similar here. I know that these stocks so say you think this stock is going to go up within the next few days, all right? And there are obviously more lucrative contracts you can find in this. Like, if you think it's going to go up in 2 days, why not buy a strike price that's 14 to 20 days out or something, right? Just a week or two out. And the reason that I've found through a lot of trial and error, trust me, you guys, I never touch a contract that will expire in less than 30 days, even if I'm super confident on the fact that the stock will either go up or down, again, call or puts. I never touch contracts that expire in less than 30 days. I found that you can still reap a lot of the reward that comes from an options contract that expires 45 to 60 days out, as you would one that expires soon, just because in the case that what you think will happen doesn't happen, maybe something catastrophic happens with the stock, some terrible news comes out or something, but something unexpected goes down, the contracts that expire in less than 30 days, the closer the expiration date, the way riskier an options contract is, and the more likely that that it won't have a buyer on the other side and could potentially go to zero. Okay, so that said, let's get into the example that I made for you guys. Again, Robinhood open. I think it's going up. This is the page you'll see whenever you try to buy any contract on Robinhood. I'm sure you're familiar if you have traded options on Robinhood. So I think it's going up. Again, you buy a call option. If you think it's going down, you buy a put option. All right, so the stock that I chose to use as the example was Nike, and I'm actually super stoked that I stumbled upon Nike for this example because it's kind of perfect in my mind. All right, so I tried to find a stock that was pretty close to $100 just so it kind of fit in to the little write-up I made for you guys, and it's just easier to do the mental math, So Nike at $95, it has a high market cap. It's a pretty stable stock. Nothing in this current market is what I would call stable. Everything's pretty volatile for the most part, but this isn't like a penny stock. The more volatile stocks, so like penny stocks and stuff, the options do change and the contracts do get a little sketchier because they're so prone to potential manipulation. But this is, again, I'm just covering kind of the basis for you guys to give you a general idea of my thought process through this. Okay, so again, we have Nike. It was down 2.7% today, down like 0.3% after hours. Nice solid 3% down on the day. So we will actually look at some put options, okay? So if Nike does continue this trend, which just for, I don't know, But for this example, let's say I think it will continue to go down. Let's look at some put options. Okay, so I think it's going down. Today is what, June 19th? We'll call it June 20th. So we will look for a stock about 50 days out. It's right between these two. So you will run into this sometimes, all right? There's not an exact 45 to 60 days out. There's a July 31st, which is kind of close, I guess. But in this case, if it's July 31st and August 21st, I would always go for the later date, okay? So better safe than sorry in my mind. So I choose August 21st, all right? And as you can see, because Nike went down today, these puts are all doing pretty well. Obviously, the further away you get from the current share price, the higher, a lot of times, the higher the option will be. Okay, so again, we're about 2 months out. Okay, so this is about exactly 60 days out, just a little over. You get the point. Okay, so we're about 60 days out, 2 months out, and we want to look for something 25 to 30% down. Okay, because again, we're buying a put. This one is perfect $70 puts. Break-even price $69.53 and to break even the Nike would have to fall 27%. Okay, so let's click on that. That is perfect. Oh, you can see here the bid-ask spread is 46 cents to 47 cents, and that is awesome. Okay, I love. See, this worked out pretty perfectly. Honestly, this is a nice contract. So when there's a super tight bid-ask spread like that, a lot of the time it means that there is a good amount of buyers and sellers on both sides. Okay, it doesn't always mean that, but a lot of times it does correlate with good volume in this contract, which is another good sign. Okay, just a little extra tip: what you want, the closer the bid-ask spread is, and again, this doesn't always apply, but a lot of times a closer bid-ask spread are the contracts I like to mess with more, because again, there is more buyers and sellers in that market. Okay. So again, we'd buy one of these, and this would be the ideal put option in my mind. Okay, so I hope you guys enjoyed that. I tried to make this as quick as possible. I just kind of wanted to get to the point. I won't ramble on any further. But again, please give this video a like if you found value in it. Just let me know if you've been trading options, if you've been messing around with options at all, if you found success in it. I do have an options course, how to simply trade options on Robinhood. So check that out. It's $25. It's along with the complete portfolio course down in the links in the description if you want to check that out. Always, you guys, always, this applies to every course. Look across YouTube, okay? Try to go through all of the free content you can prior to paying for a course. With the course, you get a direct line of access to me, so you can ask me any questions you want about that. So that's a little plus. But again, you guys, always look at all the free content you can. Always research as much as you can in regard to free content. And trial and error is such a huge part of this game. Okay, like, don't expect, even if you do take a course, to immediately catch on to it. Obviously, it will propel the learning curve a little bit, but trust me, you guys, from my own experience, trial and error is the best way to do this. So just get out, start small, play safe, because this is a risky market. So yeah, just be safe out there, be responsible, be smart. That's a rarity in this market these days. So please be smart. And again, you guys can check out if you happen to want to know exactly which contracts I have in some of my positions. Then you can check out the complete portfolio down below. It's exactly as it states. It is a complete breakdown of my entire portfolio. So all call options, all put options, all stock positions, even some cryptocurrencies, broken down by percentage. I do update that every day, and as I update it on every trading day, I do send out an email newsletter to everyone who is subscribed, talking about the trades I made that day, why I made the trades I made, just kind of rationalizing my thoughts and letting you guys, just giving you guys an idea of why I'm thinking the way I'm thinking, as well as some of my current thoughts on the market as a whole. Okay, it's just more real-time updates for myself. So check that out if you're interested. Really appreciate it. Again, you guys drop a comment down below. If you want me to cover anything next, if you guys are excited about trading options, pretty much, again, love talking shop with you guys, love learning from you guys, love engaging with you guys. So again, hit me up down there. Look forward to talking to you. And until next time, guys, always remember, take action, make waves. Peace. Later, guys.